Good afternoon and good morning. Welcome to our second session of the conference, Data is Power, Understanding the State of the Marketplace. My name is Claire Weatherby, and I'm a technical assistance provider with ICF. I'll be your host for today. As with the welcome and every other session, you all are joined in listen-only mode. And so there are a couple of ways you can get in touch with us. First, if you have any technical issues, please submit those in the chat box, and our ICF host, Sean, will be able to help you out. Second, if you have any content-related questions, please submit those in the Q&A box. We'll be checking that throughout the session, and we'll be sure to highlight some of your questions for the speakers at the end of the session. To kick off our three-day conference, so you've just had your welcome, we're doing our first full hour here on data. So we want to start with a session that kind of grounds us all in where we are as a nation with respect to rental housing and home ownership. So first, you'll hear about recent trends in rental affordability, lending, and home ownership rates from leaders in research and real estate. And then our speakers will connect these housing trends to the everyday work of housing counseling agencies. And throughout, my colleague Karen Hoskins will keep us engaged in the presentation with discussion questions posed to the speakers. So you have your agenda here. We'll start with the state of the housing market. Next, we will go to our housing counseling agency perspectives. We'll have that discussion. I'm going to give you a few tools and resources that you can walk away with today, and then we'll end with your questions, which you've put in the Q&A box. I'm going to put a link here in the chat as well to our slides, which are posted on the conference site. And I saw a question already in the Q&A. The recording will be available after the conference. Next, I will introduce you to our speakers for today. So we're really lucky to have all of these folks on the session. They're going to share some great insights about the work that they do that hopefully can inform you all. So first, in the data presentation, we will have Chris Herbert, the Managing Director of the Harvard Joint Center for Housing Studies, Dr. Courtney Johnson Rose, the National President of the National Association of Real Estate Brokers, and we'll have Jason Rivero, who is with the National Association of Hispanic Real Estate Professionals. Then for the industry response and analysis, we will have Dan Ellis, Executive Director of NHS of Baltimore, and Danny Felton, Branch Manager at NID Housing Counseling Agency. And as I mentioned before, we have Karen Hoskins, who is our lead housing counseling specialist with ICF. And so with that, I'm going to hand it over to our first speaker, Chris Herbert.
Thank you, Claire. Hi, everyone. I'm Chris Herbert. I'm the Managing Director of Harvard's Joint Center for Housing Studies. We're a joint center between the Kennedy School of Government and the Graduate School of Design at Harvard. And our mission is to expand equitable access to decent and affordable homes in thriving communities. And we do that through research, through education, and through outreach. And so I'm really happy to be with you here today. The housing counseling world is near and dear to my heart, as I've been working on issues related to access to home ownership and affordable rental housing for much of my career. So it's great to be with you today. What I'll be sharing with you today is some of the research that's featured in our annual State of the Nation's Housing Report, as well as our biannual report on America's rental housing, which will be coming out in January. So let me get started, and I'll mainly be talking today about trends in affordability. So let's start by looking at, actually the previous slide, please. The trend over the last 20 years in the share of renters who are facing cost burdens. Is that slide not available? It's the first, there should be a slide previous to this, but if not, I can talk to it. So if we look at the share of renters who are facing cost burdens, spending more than 30% of their income on rent, or even extreme cost burdens, spending more than 50% of their income on rent, that share peaked in 2011 at 50% of renters, some 21 million renters. And that was coming out of the housing crash. Since then, we've seen modest improvement in that the incidence of cost burdens over time coming down as the economy recovered, as incomes recovered. But what we saw with the pandemic is a sharp reversal in that trend towards improvement. And since from 2019 to 2021, we saw the share of renters or cost burden shoot up from 46.3% to 49%, and the number of renters who are cost burdened go up by 1.5 million and reach a new record level. So there's been enormous deterioration, in part because of the impacts of the pandemic on the housing market in renter affordability. Now, this chart is digging into it a bit and showing you how the conditions differ by race and ethnicity. And as I mentioned, overall cost burdens went up by more than 2 percentage points for all renters, but you can see it was up by a sharper percentage among white, Black, and multiracial households. And if you look at the right-hand portion of this panel, you'll see that the cost burden rates among Black renters and Hispanic renters is much higher than among white renters. Black renters about 12% higher shared burden and about 9 percentage point higher among Hispanics. And so the issue about rental affordability certainly has a strong racial equity component to it as well. Now, if we look at the next slide, you'll see that we look at, so this was, sorry, I just described this slide. This slide's got reversed in order from the original presentation. So this, I'd already covered this slide showing you the share of renter households who are cost burdened over time. So let's go to the next slide. The other issue related to rental affordability is how it's playing out at different income levels. And so here we break households into buckets of income based on $25,000 increments to give a sense of how renters at the bottom of the income distribution and more middle and upper part of the distribution have fared. One thing to note is that, as I mentioned, cost burden rates got much worse between 2001 and 2011. And then they moderated a bit before getting bad again in 2021. But if you look at the far left-hand side, among the lowest income renters making less than $25,000 a year, those shares haven't budged much. They've been extremely high all throughout this. And basically, over the last 20 years, if you're a very low-income renter, you simply have not been able to find housing that you can afford. And the shares of those renters who are paying severe cost burdens, more than half their income, is about 2/3. And so significant pain in the rental market among the lowest income households. But if you look at the next two groups, people making between 25 and 50, now these are people who are working year-round at decent paying jobs, or people even making $50,000 to $75,000 a year. What you see is that the incidence of cost burdens has gone up most sharply among these groups. It's up by about 15 percentage points over the last 20 years among those making $20,000 to $50,000, and it's up by about 28 percentage points among those who are making $50,000 to $75,000 a year. Well, what this means is that the issue of rental affordability has gone from being purely or most significantly a problem of very poor people to being a problem of working people. And there's good news and bad news with this trend. The good news is that this issue is now not something that's just a small part of the population is dealing with, but a bigger part. And that means is that this issue has become much more political salient, mostly at the local level. You can't go to a city in America where the mayor's race doesn't hinge in some significant way on what's happening with rental affordability, housing affordability, and what the mayor is going to do about it. The difficulty is that it also means that a lot of the energy is being focused politically on problems among these higher income groups. And so to some extent, I think the lowest income households are being forgotten. But this moving up of cost burdens up the income ladder has been a real notable part of the trends over the last 20 years. Now, as we think about, I've been talking about renters, but on the homeowner side, what has been the trend there? So if we look at the next slide, this is showing us a similar trend over time in the number of homeowner households who are cost burdened. And so again, this is existing homeowners, so people who have already gotten into home ownership. And you can see is during the housing boom in the early part of this century, the number of households or homeowners who were cost burdened rose dramatically from about 16 million to 23 million at its peak in 2007. And so we saw a significant number of homeowners who are facing cost burdens. Now, remember, we had about 20 million renters who are cost burdened. So in fact, homeowners there are many more homeowners facing cost burden than renters. But over the time from the housing crash and through the last decade, homeowner cost burdens declined significantly. Why? Well, in large part because 10 million households lost their home to foreclosure. So those who are most cost burdened were pushed out of the housing market and into the owner-occupied market, into the rental market. In addition, first-time homebuyers are having increasingly difficult time getting into the market. And those are the folks who are most likely to stretch. So we got to 2019 and we had only 16 million homeowner households, about 21% of homeowners who were cost burdened. Significant improvement from 2007, but in many respects reflecting challenges in that market. We go then to 2021. For the first time since the housing boom, we're seeing the number of cost burden homeowners increase by some 2 million just over that 2-year period alone. And this is during a period of time when people were flooding into the homeowner market, in part spurred by the pandemic, in part spurred by demographic movement of millennials into their 30s and beyond. And so we've seen this issue of homeowner cost burden starting to increase again. And as we look at the next slide, we can see that similar to the rental market, these issues of disparities in housing cost burdens are once again concentrated among people of color. As you can see in the left-hand side, the increases we've seen actually were significant among whites as well as people of color. But if you look on the right-hand side, the overall level of these burdens is about 10 percentage points higher among Black households and white households, about 9 percentage points higher among Hispanics. And so homeowners of color are more likely to be struggling to make those monthly payments on their home. But when we think about home ownership, we typically, particularly for housing counselors, it's often about getting people into home ownership, not what happens once you're a homeowner. So if we look at the next slide, we show the trend over time. In the bars are showing you the monthly payment on a median price home, giving prevailing interest rates and prevailing housing costs. And you can see is from 2018 through 2021 that monthly payment was pretty constant at about $1,700 a month. We had rising home prices, but we also had declining interest rates, which were offset. So that was a period of fairly affordable home ownership. Then beginning with the pandemic, house prices started to go up sharply. But initially, interest rates also went down low. And so we saw some increase in that cost of the median home up to $2,200, a not insignificant increase. But many people still had the wherewithal to make those payments. And home ownership actually rose during this period of time. But over the last year, we've seen interest rates go from 3% to more than 7%. And house price growth has moderated, but haven't really fallen. That payment on the monthly payment on a home has gone up to $2,900 a month. So that is a substantial increase from where we were just 2 years ago. And the Joint Center's estimates suggest that where we had about 7.5 million renter households in the country who could qualify for the median price home, that number, that 1 year period alone, fell by 2.5 million. And so the barriers to home ownership from these high interest rates in an environment of very high housing costs is a significant barrier to people getting into home ownership today. So I'll leave it at that, give you some flavor for the housing affordability challenges we're facing, both on the renter side and the homeowner side. And with that, I will turn it over to Dr. Courtney Johnson-Rose for her remarks.
Hello and good afternoon. I am excited to be here and excited to represent the National Association of Real Estate Brokers. We are the premier network of Black real estate professionals. With that in mind, I want to mention a report that NAREP produces that's called The State of Housing in Black America. This report can be accessed on our website at narep.com. Please note that each year we produce this report, and this report will be coming out for 2023 in the month of November. So please check our website for updates. If we move to the next slide, this shows average home ownership rates, and the rates have pretty much hovered around the same area for several years. You look at Black home ownership rate compared to the white home ownership rate. The Black home ownership rate has hovered around 44 to 45% over the past couple of years compared to our white counterparts at 75%. One of the most frustrating things about this gap is that it's not decreasing despite countless efforts in terms of advocacy and efforts to increase Black homeownership. Next slide, please. Our second slide displays the denial rates, which is a comparison between Black applicants and non-Hispanic white applicants. You'll see here with all of the applications that occur within a year, a comparison that shows a white applicant on average is denied a mortgage about 7% of the time, compared to a Black applicant that is denied a mortgage about 16% of the time on average. Next slide, please. So that opens up a conversation to say, what are the challenges? Why are these denial rates happening? Why is the gap so large, and why has that gap not been closed? NARAD produces a second report that I want to highlight here called the WIRE report. And the WIRE report is a display of an opportunity to understand the landscape facing the African-American woman homebuyer. QR code is available there. And this report is available on our NARAD website also too. But one of the things that we studied with the WIRE report are what are some of the challenges that are happening in the African-American community. First challenge is getting in. Down payment is a huge barrier for many Black families going into homeownership. We also talked a little bit about student loan debts in our SHEBA and WIRE report. The UNCF reports on average that the average African-American student will graduate from college with about $44,000 worth of student loan debt. What that means is when they go into homeownership post-college, that student loan debt is still a factor in how they qualify for a mortgage. In addition to that, we see challenges with regulatory burdens, inadequate credit, having enough credit, having enough open credit lines that puts you in a position to get qualified for a home. We also see some challenges in staying in. Foreclosures.
Sorry to interrupt you. I got a message that you may be a bit hard to hear if you're able to speak up a tiny bit.
Okay. Thank you so much, Claire. Secondly, we look at staying in a home. The foreclosure rate among African Americans are much higher. This is attributed to, in many cases, there's not a lot of reserve income or family savings that may be available to help families stay in homes as their economic situations like job loss or health challenges occur. And lastly, I just want to mention societal challenges. One of the things that the WIRE report did show us is that one of the number one reasons why African-American women were not able to purchase a home was due to debt to income ratio. What that means is they are carrying a lot of financial responsibilities for their families. So that puts them in a situation where a lot of times it's their debt, not necessarily the credit or the down payment, but the debt that they have to carry. Cars or student loans or other bills that may be related to health challenges, etc., that they are carrying on behalf of their families, and a lot of times keep them from being able to achieve the dream of homeownership. So again, getting in, staying in, and then managing the societal challenges are some of the things that we're seeing as the barriers to homeownership in the Black community. Next slide, please. So one other topic that we do want to mention that was definitely a hot topic for us and referenced in our SHEBA report and will be a part of the upcoming State of Housing in Black America report also too, is appraisal bias, undervaluation of homes in Black neighborhoods. When we look at the top 10 cities across the US, that average is about $55,000 of lost value per home that has experienced appraisal bias. Brookings did a study last year, and it showed that in the Black communities, there has been over $156 billion of lost value because of appraisal bias. So this is a big issue in the African-American community. And there's a lot of efforts that are on the way that we feel positive about that are trying to address appraisal bias. But one of the things that we are very conscious of is all of the previous lost value that has been lost attributed to appraisal bias in our communities. Next slide, please. I want to talk a little bit as we wrap up about Black homeownership post-COVID. COVID was, of course, a huge pandemic that had a lot of effects on a lot of communities. But I particularly want to highlight the effects on the Black community. Within housing, we saw a huge explosion of investor and cash buyers dominating the urban housing market post-COVID and during COVID. And that has created a tremendous inventory shortage. We also noticed that a lot of the jobs that were done in the service area affected a lot more African Americans than other ethnic groups because of the fields that we are typically employed in. We also saw how home prices soared during this period, which again has created another challenge when it comes to affordable inventory that is available for our communities. So it has been a challenge for Black homeownership post-COVID. A lot of things that we are having to address. And I do want to mention again our 2023 edition of the State of Housing in Black America report will be released this year on November 9th of 2023 on the campus of Miles College, which is a historically Black university in Birmingham, Alabama. Our report this year will focus on appraisal bias, will also focus on inventory shortage and opportunities for us and strategies for us to increase affordable housing stock in the U.S. for Black Americans. Thank you so much for this opportunity, and I want to turn it over to Jason from NARA.
Thank you, Dr. Rose. Hello, everybody. My name is Jason Rivera. I'm the Executive Director for NAREP, the National Association of Hispanic Real Estate Professionals. We're an organization made up of about 40,000 members across 80,000 chapters, both in the lending space and also title and of course, real estate brokers and agents. So I'm happy today to share with you our report as well. We put out an annual, now in its 13th year, the State of Hispanic Homeownership report. We have a QR code here if you're interested in downloading the report. So you can do a little bit more of a deep dive. We also do a deep dive in some state specifics areas. So if you're looking for information for your state, you can find that in the report. So as we go into the next slide, really talking from a high level in terms of the momentum that we've seen within the community. We, of course, have a long way to go, but we're fortunate to be now in the 8th year of consecutive gains in the homeownership rate for Latinos in the United States. We've seen that the homeowner households have increased. It's actually the largest single year gains for Latinos in the last 10 years. And so Latinos have added 2.3 million new Hispanic homeowners to this country. The Urban Institute predicts that between 2020 and 2040, Latinos will account for 70% of net new home buyers. And so we have a lot of potential, a lot of opportunity in this community to serve these consumers to help them get into a home. If we go into the next slide. Yes, we can show the QR code. I see your questions here. I'm sure we can share it. I don't know if we plan on sharing this deck with everyone as well. So what is really behind these trends? So there's several factors that we like to point to. And of course, household formations is one of the big ones here. We see that Latinos have formed 628,000 net new households. So that is the largest single year gain over the past decade. And it's also more than double that of non-Hispanic white households. So that momentum, and that's where you're seeing a lot of that, those numbers and those statistics, where they're coming from is because of the household. And so if you go into the next slide, that of course brings with it the next factor, which is Latinos are also younger and they're buying homes younger. So when we look at the median age, you're also looking at younger, we're really focused on home ownership at a younger age. So Latinos have the highest share of home buyers under the age of 25. So there's a lot of opportunity to really start earning. I think there's within the community a strong culture of seeing something tangible. It's certainly something that aspirational within the community to be able to focus in on. Next slide. So what is the potential? One back. Yes. So mortgage ready Latino. So Freddie Mac put out a report listing those that are mortgage ready. So about 7.9 million Latinos age 45 and under are considered mortgage ready. A huge opportunity there. And there's many more that through the work that you're doing in the community are ready to be mortgage ready or near mortgage ready. So that's also one of the highest as well. So there's a lot of momentum and a lot of opportunity. I look forward to kind of diving a little bit deeper in our Q&A session here following my presentation. But in terms of our priorities as an organization, if we look at the last slide here, really see that when we talk about the home ownership gaps, I think that when we look at the issue of supply, certainly immigration plays a big part of that, considering the construction industry and the labor that comes from the Latino community. So that certainly impacts supply, certainly in the housing market. Really focus on the special purpose credit programs that we're seeing out there, various lenders that are focused on this past year. And then, of course, diversity in the industry, not just in terms of the practitioners, but also executives and those leading not just the origination side of the transaction, but also on the back end. I think that's a big focus, I think, of our organization and many others, to make sure that we have individuals that understand our culture in the underwriting process and other parts of the mortgage industry. So with that, I will close and open to any questions and I'll kick it over to our moderator.
Thank you, Jason, for those insights. And thank you as well to Chris Herbert and Dr. Johnson Rose for your data. This information everyone has shared has been incredibly informative. Hello, everyone. Again, my name is Karen Hoskins, and I'm a lead housing counseling specialist and consultant with the ICF team. And today I have the pleasure of digging a little deeper on some of the industry topics that Chris, Courtney, and Jason have brought to our attention. Chris and Courtney, if you wouldn't mind joining us, joining Jason and myself on camera, that would be great. And Courtney.
I'm not able to disable it.
Okay, no worries, no worries. We can hear you. Wonderful. Thank you all so much again. So let's jump in. Chris, why don't we start with you? We saw some fairly alarming data on cost burden renters. What impact do you think cost burden renters may have on overall home ownership rates? What are your thoughts related to that?
Well, I think first and foremost, it's going to depress home ownership rates, because if I'm spending an inordinate amount of my income on rent each month, I don't have the ability to put away money for a down payment. I don't have money to pay down my other debts, both of which are going to be really important if I'm going to be able to qualify for a mortgage. And one thing I didn't talk about is what's happening with housing prices as they keep going up faster than incomes, is they're an ever increasing multiple of income. So that down payment has become a bigger burden, bigger barrier all the time. And so if I'm a cost burden renter, trying to save that money for buying a home is going to be really difficult. I will say that there's one other kind of, little counterintuitive, should I say, impact though too, which is that as rents go up so high and people are struggling to be able to afford those rents, one thing they do is they move in with other people. They stay with family longer. And what that means is that they don't form their own household. So I just would say too, the Urban Institute had put out a study recently showing that we've been seeing increases in home ownership rates among younger households. But one reason for that is because more of those younger folks aren't coming out into the housing market. So we could actually see some positive impact on home ownership rates by keeping people from forming their own households as well. So primarily I would say it's depressing home ownership, but in other ways it's also keeping people from forming households.
Okay, great. Thanks for that. And then Dr. Johnson Rose, turning to you, the data that you presented on undervaluation of homes in communities of color is certainly consistent with industry discussions on appraisal bias. HUD has even done multiple trainings and other sessions on the topic. Yes. Based on your data, the undervaluation of homes in communities of color appears to be on the increase. Any thoughts on why you think that is?
Yes, and it's something, Karen, that is very disturbing to us. I think I've referenced in my presentation Brookings data that says over $156 billion has been lost in the Black communities over the years due to appraisal bias. And it's unfortunate that unconscious and conscious bias exist. But we are encouraged at NARAB with the administration's PAVE report and the work that HUD is doing in this area. And we are definitely pleased that the Biden administration is proposed rules that they have that will enforce appraisers to adopt policies to improve accuracy of their appraisals, stop data manipulation, and avoid conflicts of interest when it comes to appraisal. So we are encouraged by the work that's being done that appraisal bias will be able to come to an end. But there are, again, millions of Black families that have lost a lot of value and a lot of wealth creation due to appraisal bias.
Okay. Okay. Thanks for that. And then Jason, turning to you, one of the demographic points on Hispanic home buyers really got my attention. Why do you think first-time Hispanic home buyers are so much younger than other populations?
Well, I know you posed this question earlier. I'm not going to pretend to be a demographer, but I can certainly understand that there are some generational considerations and really the impact that immigration has played. The Latino community. When we look at the 80s and 90s, I think when I first started in this industry, most of my focus on the multicultural consumer, we were talking about the anticipation of these individuals becoming, majority minority in various cities, right? When you look at Texas as a perfect example, now a predominant Latino market, a lot of that growth you saw in the elementary schools, right? So those children have now grown up. Many of them are obviously at that point in age, and so you're seeing that momentum. And I think it's a lot of that opportunity that's there. There are also cultural variables to that in terms of household formations. We looked at that number. So there is a propensity to have a larger homes, more children. And so I think that plays a big part into that. So we're just at the right time, I think, to really capture that momentum that the community has had. Is that going to continue into the future? Not sure, but at least what we know right now, there's a lot of momentum in terms of the youth within the Latino market.
Okay, that's really interesting. So I have a question for each of you. And that is, we've seen a lot of data here, but based upon the data, is there anything you're encouraged about related to the future of home ownership? Jason, let's just start with you again.
Yeah, look, I mean, I think that this doesn't negate the fact that we have a lot of work to do, as we talked about the educational piece of that. I think the Latino community has a lot of education to take in, and understanding of our financial system in terms of the terminology, and also our industry as a whole has a lot to do to change. But when I look at the aspiration, the positive, when I look at consumer sentiment, when I look at the buying power, the growth in wealth, all these factors, I'm very optimistic about the future. I'm not going to speak to the supply issue as well, because that's obviously hanging over everyone. But I think that if we're able to make some progress in that area, we do have that pent-up demand that is certainly there, that is waiting. And that's why first-time home buyers are really going to be the ones that are coming to the rescue to this economy. They're going to be the ones driving the industry for the foreseeable future. And so with refi out of the way and everything else, it's really first-time home buyers with that demand that's out there. So I'm positive about it, despite all the headwinds that we see in the marketplace.
Okay, well, that's encouraging.
Yes.
Courtney, what are you encouraged about?
Yeah, so one of the things, Karen, that our Sheba report does display is that there are approximately 2 million mortgage-ready African Americans. That means they have the credit, they have the income to be able to purchase, but they have not purchased yet. So we see this as a huge opportunity for our association. So we're launching the Building Black Wealth Tour. And this tour will cover over 60 cities across the country in the next 24 months, where we will be going into our communities, teaching, training, inspiring them to purchase real estate. So we're very excited about the Building Black Wealth Tour and the opportunity that we have to reach mortgage-ready African-American buyers. Second thing is, we know that there is a tremendous inventory shortage in our markets. But this also creates another opportunity. NARAB is launching the Black Developers Academy. And our Developers Academy is focused on creating developers amongst our membership. So with that, we know that who better to develop in African-American communities than African-American developers. So we will give our members the tools, the resources, the education to be able to actually do that. And then thirdly, some of the data that we're seeing is on independent mortgage companies. So when we look at our data, 16% denial rate for Black consumers. When we look at larger banking institutions, that denial rate is 20% for Black Americans. But if you look at smaller independent mortgage companies, the rate is only 13%. So we do see an opportunity with some independent mortgage companies where African Americans are getting approved at a higher percentage rate. So we are encouraged by that. And do see some avenues where we can definitely increase Black home ownership through these strategies.
Okay, wonderful, wonderful.
Yes, ma'am.
And then Chris, what are you encouraged about?
Well, I think my colleagues have spoken well to it. I would just point to Dr. Johnson Rose's slide showing the increase in Black home ownership and similarly an increase in this that Jason showed in Hispanic home ownership during a period of time when housing was becoming more unaffordable. And so I think what that points to is the strong desire on the part of people of color to own a home, and the fact that with the right supports, they can make it there. And I think we're facing an even more difficult environment now with interest rates as high as they are and house prices as high as they are. But I think we can build on that strong desire of people to own a home and the fact they're willing to do the work to persevere. And with the help of lenders and housing counselors, I think we can make a pathway for home ownership. And so I think there's a lot to be encouraged by the progress we've made, but also certainly not nearly enough.
Okay, great. Excellent. Thank you, the three of you, for sharing your insights. So as a reminder, if you have a question, please submit it using the Q&A box at the bottom of your screen. Chris, Courtney, and Jason will be joining us again when we get to the audience Q&A portion of this conversation. But now let's transition our discussion to two housing counseling leaders for their thoughts on what the implications of the data are for housing counseling agencies. Dan Ellis is Executive Director of Neighborhood Housing Services of Baltimore, and Danny Felton is here representing NID Housing Counseling Agency. Welcome to both of you. It's nice that you're here.
It's good to be here. Thank you, Karen.
Great.
Welcome.
So Dan and Danny, I have a question for both of you. What's your reaction to this data that you've seen presented? And specifically, was there anything that particularly stood out for you? Dan, you want to take that one on?
Sure. So thank you, Karen, for that question. First of all, I would say thank you to all the panelists and the data that they have shared. As a housing counseling organization working in Baltimore, we really do need to track and understand what the national trends are. There weren't a lot of surprises. There were some things that were confirming of what we see locally. Particularly in Baltimore, we're working in the African-American community with most of our customers. So some of the observations that Dr. Johnson Rose found in her report and highlighted in her report were really consistent with our experiences locally, particularly around some of the barriers that we find to home ownership with down payment assistance, student loan debt, credit barriers that are in place for folks. So it's really affirming to see that what we're experiencing locally aligns with what some of the national industry is finding as well.
Thank you for that, Dan. And Danny, anything that stood out for you?
Thank you. Yes, just hearing some of the data as Chris mentioned, and also Dr. Rose mentioned, as it relates to that there is a strong desire for individuals to purchase a home in the Black community, and just hearing about the Building Black Wealth Tour and understanding that, it's going to take some grassroots efforts, to really go where the people are, to tell the story, to educate them and to empower them on the steps to become mortgage ready and to purchase a home.
Okay. Okay, great. So, Dan, going back to you, data is certainly important, even at the local level. Can you point to two sources of data that NHS of Baltimore uses to inform their program designs, as well as to identify any strengths or weaknesses within programs?
Sure. Thanks, Karen. There's really two types of data that we look at, in addition to the national trends that we need to track that we've talked about a little bit already. And the first is looking at the local data. What's going on in our market? So I need to know what is happening in Baltimore in particular. And we do that every month. We get a report from a partner agency. It's a nonprofit called Live Baltimore that sends a report based on all of the real estate data of the transactions over the previous month, based on the multiple listserv. And that lets us see what the trends are locally right now, and how do we use that in making decisions. Sometimes it's things like when you understand that the industry is constrained in our local market. In a home buyer education class, you may want to spend a little bit more time talking about the bid process with your customers that you're working with, and how to make a competitive offer, and making sure that they're prepared to see multiple houses, or how to compete in a multiple bid environment. So it may inform a little bit of how we put emphasis on some of the curriculum that we're working through in a class setting. But even more important than the local data is really the organizational data that we work with. And that's information that we collect as an agency about the customers that we work with. So at NHS of Baltimore, we have about 300 customers a year who buy houses. And that's the number that we're really most interested in, is who ends up with keys at the end of the day. And we monitor a lot of that data to see if it aligns with our values as an organization. So who is buying the houses? We want to see at least 70% of our buyers are Black buyers, because in Baltimore, that's the predominant group that we're targeted with. It's 60% of the population in our city. And so we're looking at that and monitoring that and making sure we're at least at 70%. We typically are in the 80 to 85% range, but if we see a fluctuation in that, we may need to adjust how we're doing outreach, how we're connecting to customers, who are the partners who are sending us customers, where are our referrals coming from. Some of those types of things may need to be adjusted in real time. We also look at what's the income of our buyers. In Baltimore, we're not a high-cost market. I know some of my colleagues around the country are, but you can buy a house in Baltimore. It's not going to be a fixed-up house, but for about $100,000, and with a median price of about $225,000. And so that means we can reach lower-income bands to buy houses in a way that some of our peers aren't able to, but understanding our local market can do that. And so we track the income to know, are we accomplishing that? So we know that last year, we helped 300 people or so buy houses. 42 of them were below 30% AMI in Baltimore. And then another group were in the 30 to 50%, about 78 of them were in the 30 to 50% area median income. So for us, that allows us to reach lower into the area median income, which we can do because of the market that we're in and the cost of the housing relative to the area median income. So having that information, that local data, really allows us to align how all of this works.
Okay, great. I really like your comment about making adjustments in real time. That just demonstrates that you're being responsive based upon what the data is telling you. That's great. And so, Danny, based on the trends currently taking place in the market, what advice would you give housing counseling agencies on ways to promote homeownership in the Black community?
Well, one of the key things is really just pivoting your outreach efforts, more so focusing specifically where the potential clients are. So when we look at 6 of 10 Black households either are affiliated with the local church, are affiliated with a fraternity or sorority. They're involved with a civic organization. They're involved with a union, even with the Parent Teachers Association. So being able to, transfer this instead of a homebuyer 8-hour homebuyer class to really going into those environments and providing the financial literacy, educating and informing them about the steps to home ownership, educating and informing them the benefits of owning real estate is the approach that we have to take today. Because for long we've heard the conversation that home ownership is unaffordable, but we have to change that narrative and just basically speak to them and let them know that home ownership is achievable for everyone. You just have to be disciplined. There's resources, there's education, there's products, programs, there's changes that are happening in the market to make homeownership affordable. I mean, hearing the statistic about student loan debt, the average Black student that comes out of college has $44,000 in student loan debt. Hearing the numbers as it relates to the cost of renting as over a 3-year period, that it was $1,800 3 years ago, and now it's the average is $2,900. Those are motivations that we should, be able to talk to our communities. And so I think it even goes further than that. And so what we've done is we've taken even a deeper dive to realize that, hey, we got to catch these individuals much earlier, even from the HBCU level. So there's an initiative that we have with HBCUs where we're going out, having those interactive conversations, talking about building wealth through homeownership, not just getting the bag or getting the check, but realizing that the greatest accumulation of wealth comes through owning a home. And so being able to pivot our outreach efforts and address those audience from the HBCU perspective, as well as even digging down into the high schools, educating kids about, the actual credit and budgeting and understanding, the steps to home ownership is something that if we catch it early, we will sort of rekindle the fire of understanding that, hey, the goal is really to purchase a home. And if I purchase this home, it could lead to generational wealth, potentially multi-generational wealth for those children and their children's children.
Okay, great. Thank you for that. And I appreciate your mentioning the connection to HBCUs as a possible strategy for organizations. There's actually a session of this conference tomorrow that will be touching on some of that. So folks who want to learn more may want to check out that particular session. But thank you, Dan and Danny. That was great. Now, I'd just like to invite Chris, Courtney, and Jason to join us again, and we can see if we have any questions from our audience. Claire, do we have any questions?
We do indeed. Folks have been pretty active in the Q&A box, so I've been queuing some up over here. We have a question that is referring to Dr. Courtney Johnson-Rose's slide. I think it was the slide referencing the Wire report, and they're wanting to know if you could speak more about what the regulatory burdens are that Black women home buyers might face.
Yes, thank you so much for that. There's a couple of examples that I can give on that. One is regulatory burdens on our local and state level, just in terms of zoning and our ability to develop affordable homes with certain restrictions on square footage and things of that nature. Materials that have to be utilized can make the housing costs more expensive. And make it harder to be able to create an affordable home. There's also a lot of regulations. I'll give an example of one regulation, which is qualifying borrowers with their spouse. So there's examples of when a couple goes to purchase a home, the wife may be the borrower, that's the primary borrower, and the husband may not be able to qualify to be on the loan, but we still have to qualify that female borrower with the husband's debt, or vice versa, with the husband versus the wife's debt. So now you have one borrower, you're only using one income to qualify for the loan, but you're using both of the spouse's debt. So that's an example. student loan calculation, how student loan is calculated into the qualifying, and how that affects debt to income ratio. So all of those things kind of calculated together in many cases can be a barrier to homeownership for the African American community. So one of the things that we look at with NARAB, with our State of Housing in Black America report, is how do we overcome some of those burdens? What are some policy positions or guideline positions that we can recommend to different entities to be able to help open up the door to increase Black homeownership and the rate that African Americans can qualify for mortgages?
Great. Thank you so much for expanding on that. And I guess just to continue with you and maybe Danny, there's a question here wondering what is NID doing working with HBCUs? I just want to point to, we have a session about this in the conference, so if you can maybe briefly talk about that.
Yes. Can you hear me?
Yes. Great.
Yes, we have a scholarship initiative that we're launching at 4 different HBCUs, in which we will be working with students, also introducing them to the industry, talking to them about being able to sort of do an internship with our local branches. Currently, we have over 55 branches and 165 certified HUD counselors around the country. So through our grassroots efforts and pilot through these 4 HBCUs, we will be working more closely with the school students, teaching them the process, credit, budgeting, and understanding the benefits of owning real estate, as well as providing internship opportunities for them to be able to understand the different careers in real estate, because many of them don't realize it, but there are over 35 to 40 different careers in real estate that many of them can tap into just at the age of 18. So those are some of the initiatives that we're working on.
And Claire, I just want to give a plug, since Danny teed it up for us to give a plug to that session tomorrow. It's at 2:00, modeling housing counseling agencies, higher education partnerships, and NID will be represented in that conversation, and we'll talk more about their scholarship program.
That's great. Thank you. And I think you're kind of pointing to a theme that we're seeing from some other questions from folks in the audience around the role of financial literacy and also the role of partnerships between housing counseling and real estate. So I'm wondering if, Jason, you have anything further to say about that, given your seat at the Hispanic Real Estate Professionals Organization.
No, certainly. Well, I mean, I think same goes with all the other, with NARAB and ARIA and several of the other trade associations there. I think, we certainly need to do a better job of making sure that our practitioners and as well as the housing counselors are working more closely together. I think there's a lot of opportunity there. We are working on a national level with Unidos US. They just launched a what they call their home initiative. And so we're working on that and seeing how we can partner at a local level in some important markets around the country. But there's a lot more that we can do in that aspect, and making sure that those resources are available, and then they also have practitioners, real estate practitioners, that are passionate about first-time home buyers, that have really built their business around helping individuals get into their homes and knowing that it's not just a transactional relationship, but it's something that they can really build on for a long time and help these people build generational wealth.
Thank you. I'm seeing more questions in here. I just want to give space for Karen in case you have any that you'd like to ask.
I do have one for Chris. Going back to Chris. Chris, and what we noticed from the data is that interest rates are currently at or below where they were in the early 2000s, when homeownership rates were at their highest, particularly in the Black community. What do you think is the difference between then and now as it relates to
the short answer is house prices. So since the early 2000s, up until last year, early last year. If you look at trends in interest rates, they've been steadily coming down. Off the top of my head, I can't remember, but I want to say they maybe were 9% in 2000, and they just kept coming down and coming down. They had some ups and downs with the economic cycle a bit. But what does that mean? When the interest rate comes down, it means people have the ability to bid more for house price, right? So if the interest rate's at 3, I can bid a lot more than I can at 5. So as interest rates came down, we bid up house prices, we bid up house prices. Here's a startling fact. In 2000, among the 100 largest metro areas, 2/3 of those markets had price to income ratios, meaning the house price to the median income ratio that was under 3. So house prices were 3 times income. In 2023, do you know what that number is? 1. 1 out of 100 metro areas have price to income ratios of 3 or less. 2/3 have price to income ratios of 5 or more. And so when the interest rate goes back up, house prices don't react right away. So we're stuck with interest rates that are at 7%, but we got house prices that were based on interest rates at 3%. And so it's really created a dynamic that makes housing very unaffordable.
Okay, thank you for that. Appreciate it. And I have one for Jason as well. And we appreciate the fact that we have the real estate community represented here, both with yourself and with Dr. Johnson Rose. Question, and this is something that housing counseling agencies have worked on for years, as well as the real estate community. But how do you think housing counseling agencies can better partner with real estate professionals?
Well, for example, we put together a report. I mean, and I don't want to generalize this, but I think that there are certain individuals within our organization. We put out a report every year called the NAREP Top 250. And those are the top producing agents and LOs that are kind of focused on the Latino market. And you would find you could really actively look at that list and find individuals that are their main focus are first-time home buyers. I would say that that's one of those areas to really focus on and partner with those individuals. And they are likely very plugged into the community as well, hosting events, understand a lot of those cultural nuances and the issues that are a part of that. But I think that that's one of the areas that are opportunity. We have about 80 chapters around the country. We would certainly love to have more people involved. You don't have to be Latino to be a member, and come and join us and come learn, be a part of that, and build those relationships. I would say are some low-hanging fruit.
Okay.
And I'll put a link to that report here in the chat.
Okay, great. Thank you for that, Jason. Claire, I think we might have time for maybe one more question if you have anything that you're seeing.
There's a question here that might be good for Dan Ellis. So asking for recommendations or best practices for capturing your own agency's data to inform your work. So taking in information about these trends, but also understanding your community using your CMS. Dan, do you have thoughts about that?
Yeah, so in managing your internal data is going to be really critical for any housing counseling agency. So most of us use some form of a client management system, and that's going to produce a fair bit of data that you can mine depending on what your client management system is that you're using. And so I would encourage you, learn the capabilities of it, make sure that you're entering your data accurately and that your data is reporting correctly. It takes work, it takes time, but it's something that will be really critical, because then being familiar with your client management system and know how to pull the data out to get the reports that are needed, or the information that's needed to be able to make the recommendations that are desired. So that's really what I'd recommend, is focus on your client management system. That's where most of us keep our data. You don't want to be running lots of spreadsheets. That's going to be too cumbersome. So use the tools that you already have. And if your client management system can't do it, then look and see what options you have for finding another one that may meet your needs.
Okay, great. Well, Looks like we're about out of time, but thank you again to all our speakers and also to you, our audience, for your time and attention. These are important issues that have implications for the clients and the communities you support every day. So we hope you found this information to be valuable. And with that, Claire, I'll turn it back to you for some additional information as we prepare to close.
Great, thank you, and thanks to everyone. So I'm just going to let you know that on the next slide, we have links to all of the reports that were referenced today, as well as the organizations that were present. You can find that on the conference website. And then we'll also, just looking ahead to the rest of the day, we've got concurrent sessions starting at 2:30. One is going to be hosted by Karen, Aging with Equity, Housing Stability, and Generational Wealth for Senior Homeowners. So the CFPB will be on that session. That's going to be exciting. And then we'll also hear a bit about some unique projects related to manufactured and factory-built housing. So you have a choice there. And then also an exciting session about the update of the national industry standards for homeowner education and counseling. So we hope to see you at those, as well as a special session on Thursday featuring an updated guide to choosing a CMS, in case what Dan said right at the end there piqued your interest. So you can find links to everywhere you can stay connected, the website, HUD Exchange, emailing HUD, and then also on 6 Connects, which you should have a link for in your email. And I think that about does it for us. So thank you again for attending, and thank you to all the speakers. We look forward to seeing you later today.